The idea of transforming a modest $10 investment into $100 in the Forex market captures the imagination of many aspiring traders. For beginners, the prospect of achieving such significant returns with a small starting amount is both exciting and motivating. However, this goal comes with notable challenges, including the need for strategic planning, disciplined risk management, and a solid grasp of market dynamics. While the potential rewards are enticing, it's important to recognize the risks and complexities involved in Forex trading, especially when starting with limited capital. The foreign exchange, or Forex market, is the largest and most liquid financial market in the world, operating around the clock and connecting traders globally. One of its most appealing features is accessibility, allowing individuals to participate with relatively small amounts of starting capital. This is made possible through innovations like cent accounts and micro-lot trading, which enable traders to open positions with just a few dollars. These options reduce financial risk and provide an opportunity to learn and practice trading strategies without significant exposure. As a result, even beginners can experience real market conditions and gradually build their skills in a manageable way. Setting realistic expectations is crucial when aiming to grow a small Forex account. Conservative strategies might target steady returns, such as 5% per month, leading to gradual but sustainable growth over time. In contrast, aggressive approaches seek higher gains, like 10% monthly, but come with increased risk and volatility. Regardless of the strategy chosen, patience and consistent performance are essential for long-term success. Focusing on disciplined trading habits helps build a solid foundation for future account growth. Risk management is a crucial aspect of trading, especially when working with a small account. One effective technique is to use proper lot sizing, which means trading the smallest possible position size, such as 0.01 or 0.001 lots. This approach helps limit your exposure to market fluctuations and reduces the impact of any single loss on your overall account balance. Setting stop-loss orders is another important strategy, as it automatically closes a trade if the market moves against you beyond a certain point. By combining small lot sizes with disciplined stop-loss placement, traders can minimize potential losses and preserve their capital for future opportunities. To start with a simple Forex trading strategy, first choose a major currency pair like EUR/USD, known for its liquidity and lower spreads. Begin by analyzing the market using basic technical indicators, such as moving averages to identify trends. Set clear entry and exit points before placing any trades, ensuring you use stop-loss orders to limit potential losses. Trade with the smallest lot size available, which helps manage risk, especially with a small account. Consistently following these straightforward rules can help beginners build confidence and develop disciplined trading habits. Advancements in technology have significantly transformed the landscape of Forex trading. Trading algorithms and deep reinforcement learning systems can analyze vast amounts of market data, identifying patterns and trends that might be difficult for human traders to spot. These tools help automate decision-making, allowing for more precise and timely trades. While such technologies can enhance efficiency and potentially improve returns, they also require a solid understanding of both market dynamics and the underlying algorithms. As a result, traders who leverage these innovations often gain a competitive edge in the fast-paced world of Forex. Trading with a small account often leads to common mistakes, such as over-leveraging positions or risking too much on a single trade. Impatience and the urge to recover losses quickly can also result in poor decision-making. To maintain discipline, it's important to set clear risk limits and stick to a well-defined trading plan. Emotional control plays a crucial role. Taking breaks after losses and avoiding impulsive trades can help prevent costly errors. By focusing on consistent, small gains and managing emotions, traders can build a solid foundation for long-term success. Growing a $10 Forex account is a challenging yet achievable goal when approached with the right mindset and strategies. Success hinges on building a solid foundation through education, understanding market dynamics, and practicing disciplined risk management. By starting small, using appropriate lot sizes, and setting realistic expectations, traders can protect their capital while gradually increasing their account balance. Continuous learning and adapting to market changes are essential for long-term growth. Ultimately, patience and a commitment to improvement are the cornerstones of sustainable success in Forex trading.